Humanity's constantly searching for the hardest type of money, the one with the highest stock to flow ratio. And over thousands of years, the two that really hold up are silver and gold, especially gold. Historically, with commodity monies, basically you'd have different types of commodity money. So some cultures would use shells, some cultures would use something else. And when technology improves, we figure out how to make more of that type of money. We say, okay, now, our fishing boats are way better. We can go out, we can get like a ton of shells and devalue them, right? So basically humanity's constantly searching for the hardest type of money, the one with the highest stock to flow ratio, meaning that we can't really bring a lot new to market compared to how much is already distributed throughout the market. And over thousands of years, the two that really hold up are silver and gold, especially gold. That's the one that, like, if you look at a century-long chart of the estimated gold inflation rate, meaning that the amount of new gold created every year compared to the estimated amount of above ground gold, it oscillates around 1.5% per year with a very narrow band of 1 to 2%. It's actually like impressive to look at. And that's because it's basically a very high stock to flow ratio asset, and there's a built-in difficulty adjustment because as over thousands of years, as we've gotten better at mining gold, we've also mined the easiest deposits of gold. So it's kind of like the gold is getting harder for us to mine to keep up with our technology. It's the only, along with perhaps silver, it's the only commodity that's really kind of maintained that. Now we also have super rare commodities like rhodium, but because they're not widely held, they're not liquid, they're not fungible enough, they don't really serve that role as money. So kind of gold as the highest stock to flow ratio commodity has been the one that's been resistant to debasement over thousands of years. And so that as you kind of have this pyramid of almost like a March Madness chart of all these different commodities kind of competing for the top slot, and it was gold that proved to be the most resistant to debasement. But the downside of gold is that it's not fully portable, right? So it tends to be centralized. And then so we had countries kind of they would centralize it in bank vaults and then central bank vaults and then issue notes against it. And then of course what you can do then is end redeemability or devalue redeemability for those notes relative to gold. We shifted to more of a fiat-based standard. We shifted away from commodity money and towards fiat money. And that's where after technology, bring in the second part, which is that kind of political power, geopolitical power, kind of shifting roles of power. And after World War II, the U.S. had by far the world's largest navy. We had something like 40% of global GDP. So the United States could go to different countries and just basically make deals with them, kind of like deals you can't refuse, sort of, and say, okay, so we're going to give you protection from other entities and ourselves in exchange for you using dollars, as say you're only going to sell your oil globally in dollars, or you're only going to sell this in dollars, and you're going to hold your a large portion of your reserves in treasuries in dollars. And so, due to the fact that we're the large, the Navy that can really kind of defend global supply chains, and due to just that global reach, we've been able to maintain that system. And essentially, what it is, it's the dollar backed by oil, but not really pegged to oil, right? So globally, because OPEC's been only pricing their oil in dollars, everybody around the world thinks in terms of dollars, needs dollars if they want to import energy. And then on top of that, we layered the euro dollar market, which is basically the debt markets. So that kind of petrodollar system kind of kick-started the network effect. But then on top of that, all these countries took out debt in dollars. Really, if you look back since the global financial crisis, there has been a shift. So for a while, gold reserves of countries were going down. The UK famously sold some of their gold, roughly at the bottom, like 20 years ago. And really, ever since the global financial crisis, and then in the years that followed, there's been kind of a re-emphasis on gold around the margins as a neutral reserve asset. And so I think that, if anything, this might have accelerated that to some degree. And so I think that trend is still going to be intact, where they'd rather buy gold than continue accumulating treasuries. And they can accumulate both, but they can accumulate more gold than treasuries rather than literally sell gold and buy treasuries, right? So I think that the share of gold, both through a combination of purchases and through appreciation of that gold relative to dollars, is likely to make those reserves a larger share of their effective assets over time. Something I've been writing about since 2020 is that the reserve system and the global payment system is becoming more diversified and is likely to continue to becoming more diversified. And what I mean by that is when people talk about, say moving past the current dollar standard, they're saying what fiat currency is big enough to replace it? And my answer is none. There's no, the yuan's not big enough, the euro's not big enough. There's no individual fiat currency anymore big enough, because that was a unique situation. Back in the, after World War II and then in the beginning of the 70s, when you're 35 or 40% of global GDP and you're the biggest commodity importer, then you're big enough to be the heart of the whole system. Whereas if the biggest economy in the world is only 20% of global GDP, it's really hard to be the one currency that backs the whole system. And it even has costs for that country because they run, the US runs these huge structural trade deficits basically in order to support the system. So we have advantages from the system and we have disadvantages from the system. And so as we go forward, my expectation was that, due to increasing technology, including what we just talked about with, digital payment channels and things like that, and then two, the increasing recognition that treasuries are going to persistently yield negative real yields, negative inflation-adjusted yields going forward, that countries are going to want to diversify more, both in terms of their payment channels and their big pie chart of assets that they hold to backstop their national reserves. How concentrated do they want those to be? And what percentage do they want in fiat currencies? What percentage do they want gold and other assets? And so I think over time, we are going to see a more bifurcated world. You have the United States, you have China. Those are kind of right now the two biggest economies. You also have, the rise of India. Europe's still a very large player. And to the extent that different countries can make alliances, right? So if Russia and China can hold some sort of alliance between themselves, in some ways they shore up each other's weaknesses because, China is a manufacturing powerhouse. They're decent with technology, but they're short commodities. They need to import commodities in most cases, whereas Russia is kind of the opposite scenario, right? So they're good in aerospace technology, but they're not a large manufacturing hub, but they do have commodity exports. Gold is kind of the main asset right now, right, that they can turn to, and then they're down the road, if something like Bitcoin gets bigger, they can explore that. Some of the small countries can already explore that, but right now even the gold market's barely big enough to increase its share unless the price goes up quite a bit, right? Let alone what would have to happen to Bitcoin if that was kind of used in any sort of meaningful way there. And so I think we're going to see more diversification and more emphasis on neutral reserve assets like gold. So I am still bullish on gold as an asset. I have been since 2018. There's obviously periods of time where it's better or worse than others. I do like Bitcoin as well as a more volatile but potentially higher returning play along similar lines. I also like, in general, commodity companies.